Hi everyone and welcome to the weekly update with me, Richard Perry, Market Analyst at Hantec Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, we've had a lot going on this weekend, lots of elections going on. We've had some monetary policy decisions last week which are still filtering into the markets. We had Brexit chat, we had a credit rating downgrade. All of this is affecting the markets and all is going to continue to impact across Forex markets, equities and commodities in the coming days. Now, main factor, I suppose, at the weekend was this German election. Angela Merkel did not get the result that she wanted. We had the rise in popularity of the far-right AfD party. She lost the Grand Coalition partner, the SPD, and it looks like her hands are fairly well tied, actually, in terms of her potential coalition partners. So what we have seen is the euro coming under a bit of pressure today. German yields about sort of 3-4 basis points lower on the 10-year Bund yield, and that's impacting across the euro. And we've also seen, for example, a reaction on the Kiwi as well. The New Zealand elections, again, an inconclusive result there. We've seen also markets still responding to this Fed meeting that we had last week. The Fed surprisingly hawkish, actually, and sort of starting its quantitative tightening program, and certainly the impact across these markets will be continuing, because I think in the coming months and years potentially this could add on. In terms of Fed officials, they thought the quantitative easing cut 1% off the 10-year yield, so theoretically you'd start to put that back on to a certain extent, although obviously the Fed is not going to cut the balance sheet as much as it increased the balance sheet, but certainly there is a factor at play there. That's in the long term. Near term though, it's an inflation story, and inflation this week is a key factor because we've got the Fed's preferred inflation data, the core PCE. That's on Friday, and that is something that the markets will certainly be focusing on. I think the market is more worried about inflation than the Fed seems to be at the moment, and the Fed didn't really change its inflation forecast, and it's still pushing ahead with its rate hikes of one probably in December and another 3 next year. But the market could move around on its expectations, certainly if we start to see inflation picking up in the States. Not expected to on Friday though. So in terms of what we got on Forex markets, as I said, the euro under a little bit of pressure. Technically speaking, is it beginning to roll over? We've seen this uptrend channel intact for the last 5 months. Momentum indicators beginning to lose a bit of momentum, and a little bit of impetus to the downside is building. 1820 is a key support that we need to watch on that. The uptrend channel comes in at 118.55 today. In terms of sterling, we've had a lot of upside move from the Bank of England turning more hawkish. A lot of political factors playing out on Friday as well. We had that Theresa May's speech in Florence on Brexit, and also the credit rating downgrade from ratings agency Moody's. But the market is fairly settled actually on Monday, and still sort of trading in about a 200 pip range. Breakout of that range either way implies 200 pips. So we'll wait to see which way that goes. But certainly on the consolidation from an upside breakout is what we're seeing at the moment. So perhaps we're going to see further gains. Now, in terms of your dollar yen, the strengthening dollar, or the dollar which has been stronger, and in conjunction with the weakening yen, following on from the Bank of Japan, and the likelihood is that the yen is going to remain weak, following on from this surprise snap election that Shinzo Abe has just called on Monday. So that should help to underpin dollar yen. Now, in terms of your equity markets, what we have seen is a little bit of correction coming through on Wall Street. Very strong move on Wall Street to the upside recently, but just starting to sort of come back a little bit. Nicely supported still, though, at 2,480 to 2,490 on the S&P 500. But what we still have is this sort of little consolidation that we've got on equities nonetheless. So is this going to prove to be another little buying opportunity? Certainly the trends would suggest perhaps so. In terms of your DAX and your CAC, similar sort of moves. Bullish breakouts, consolidating. Is this going to be the opportunity that we've seen for the next move to the upside? The DAX hasn't really been impacted yet by the German election, but certainly the CAC also remains positive. FTSE 100 underperformer is a negative correlation play with the sterling, and certainly I think that remains something that we need to keep an eye on. Now, on your commodities, what we have got is gold, which has been under pressure. We've got the strengthening dollar. We've got the Fed, which has turned hawkish, but at a time at which inflation rates remain subdued. So that's a double whammy in my book for gold under pressure. Now, the only thing that you would argue that supports gold at the moment is this North Korean story. If that continues to accelerate and arguably spiral out of control, then you could see gold starting to push higher again. But at the moment, gold is under pressure. And breaking under 1300, I think that remains the case. Now, what we've also got is the oil market, which is arguably coming back towards balance, and that is helping to support the price. We've also seen OPEC members, which are beginning to discuss the potential for further production curbs. Nothing yet announced, but certainly that could be a story for the coming months. But what we have seen is oil pushing higher, and I think that remains the case on a technical basis, which is improvingly strong. Now, throughout this week, what are we looking at? Well, we've got some a little bit of housing data, a little bit of new home sales for the states tomorrow. We've also got consumer confidence as well. Now, Wednesday is interesting because we've got the final reading of GDP for the UK. 0.3% is the expectation there, but also current account balance. Now, that will be interesting for sterling traders, I think, at 9:30 on Wednesday morning. Then into the afternoon, we're looking at the EIA inventories for the oil market. That's a standard on every Wednesday. But also we're looking at the RBNZ, which it'll be interesting to see how they react given the election result that we had at the weekend, whether that sort of plays out into the monetary policy decision. But also then on Thursday, we're looking at the US final reading of GDP as well, so that is an important factor. Then on Friday, it's all about inflation. We've got Japanese inflation and the US core PCE. So lots going on this week as ever, but I wish you good luck in your trading today and for the rest of the week, and I'll speak to you soon. Thank you.